Well, folks, the markets have been tanking. Stocks have been going through the floor. There's so many stocks down 50, 60, 70, 80% right now. I couldn't even count them. Like, I can't count that high. Like, it's literally that many stocks. I'm seeing people make some really poor decisions right now in the market. And I want to just kind of put a video together here telling you what not to do in this sort of market. As somebody that has seen, bear markets and correction markets and, markets that have gone down 20, 30 plus percent. And been in these sorts of markets before, I just see it time and time again where people make some really poor decisions. I thought we'd just start out here. So I don't know if you guys remember this. Maybe you were in the market, maybe you weren't in the market. But 2020, crude oil went negative. I know it was like the most ridiculous thing to ever think could even possibly happen. But crude went negative. Like, it was the most ridiculous thing. So I show this to illustrate a point here at the start, which is essentially nothing is promised in the financial markets, in the stock market, right? And crazy things can happen that are outside of your what you thought was possible. So, you never want to go too heavy into something and go all in something, whether it's crude oil or whether it's a stock or something like that. You want to be diversified, but at the same time, you got to understand these are freak situations. And, betting that oil will go negative again, you could be waiting 20, 30, 40, 50, 100 years for that. That might never, ever happen again. Sometimes freak situations can happen, but it's very few and far between. What I'm showing you here is essentially the markets, okay, and how much the markets have gone down. And, this is looking at the IWN, which is the Russell 2000. It's down about 21% as of right now. QQQ is down 20%. And Dow and SPY are in correction now, but they're not as bad. These are down 20% plus, which means they're now in bear market. These ones are only in correction territory, which honestly, if you look at a lot of stocks out there, it feels way worse than what this is saying. I mean, it feels like we're in a dramatic bear market if you look at a lot of valuations, how much so many of these stocks have come down. So what you need to understand about this right here is this happens in the market. It doesn't happen too often, but it does happen in the market where you can see the indexes go down 20+% in a pretty quick amount of time. This has happened in a matter of a few months. It's not like this has happened over the course of a year, 2 years. It's happened quickly, okay? And, if you're going to have all this stuff thrown at it, inflation, the Fed, Russia, oil, if you're going to have to throw all this at the same time, you're going to get the markets to sell off 20+%. That's what's going to happen, right? Now, the VIX has spiked recently, okay? I want you to remember this one very important thing for the rest of your financial journey in the stock market. This one thing, okay? If the VIX goes over 35, people start doing dumb stuff, okay? People start doing dumb stuff when the VIX goes over 35. It happens every single time. And basically the way to think about this is if the VIX goes over 35, it means usually people are panic selling stocks and just cashing out of everything, and people are making usually very dumb financial decisions. Just remember that forever. If you ever see the VIX over 35, understand, people are being dumb. Because that's exactly what happens in the stock market when the VIX goes over 35. People are making usually very bad financial decisions, and they're selling out of stocks en masse, which is usually always a poor decision. And in order to run up to that 35, right, you're usually already in a sell-off territory. And, the more you see a VIX spike over 35 on days after the initial spike, the dumber people are getting in the market, essentially, okay? And the more poor decisions they're making in the market that are ultimately going to be decisions they regret. But it is what it is, and you just have to kind of let those time periods play out. So remember, that's the sort of market we're in right now, okay? Now, crude oil has been going insane, right? From negative, where it was at a couple years ago, or less than 2 years ago, to essentially 122. Now, when you see a move like that, and especially this most recent move, guess what happens? Everybody wants to follow that move, right? Everybody's looking at this and they're like, oil's easy money right now. How do I play oil? And it's natural. It's human nature, right? You see everybody making a ton of money over there and you're like, dang, I want some of that money too. How do I get some of that money? And so you start flocking over there, right? And so this is what people are starting to be involved with. They're looking at the oil plays and they're like, man, I want to get some of this oil money, right? And so people start considering USO. Now, I played USO for a very short amount of time coming out of Rona, which I don't do a lot of trading plays, but I did do USO. And the reason was I just understood, like, you know, oil was way too low. It was unsustainably low, and oil was going to have to come up, and they were reorganizing USO. So it was going to be in a situation that USO was going to more than likely go up, right? And so obviously that happened. I got out of USO and put that money in other places. But what I will say is now everybody's flooding in USO, right? Because it looks like oil's easy money. People are like, hey, this Russia-Ukraine situation isn't fixing itself tomorrow. You know, if anything, oil is going to likely spike up. But where you get into some trouble if you're trying to play oil, right? This is a commodity, all right? This is a commodity, which means it's going to go back down. And these moves upward, it can play out like this for a 2-week span, a 3-week span, maybe a few months. But at the end of the day, we know this baby's coming back down. And the problem is, people start getting out of the trade before it actually even peaks in terms of peak FOMO around it. And you could end up stuck in a trade where you're stuck in it and you're thinking it's going to go back, and you're like, no. There's still this bad thing happening, and there's still this and this and this, and you're like adding it up, and you're like, this has to happen, this has to happen. So wait a minute, no, oil has to come back, right? And then it doesn't come back, and you're like, wait, I'm stuck in this losing trade, and you probably FOMO'd into it in the first place, right? And so that's what ends up happening with something like oil. And you look what was pumping today. Everything was red. Everything was red out there except utilities and energy. Energy, okay? Energy was the play once again. And so people are flooding into oil and gas stocks. They're flooding into USO because that's what looks like the easy money in the market. And right now, there's no money to be made in this market as of right now in the short term, right? Because all stocks are going down. The whole market's going down. Everything's getting devastated. Whether it's right or wrong, that's what's going on. And so people start saying, okay, where's the place I can make money right now, right? And they consider, energy, oil stocks, gas stocks. These are the plays right now, right? And they flood their money in left and right, and all to end up being tore up in the end. You know, and it reminds me of last year. You know, AMC was an interesting play at $2, at $5 a share. AMC was a very interesting play as a recovery play, right? But then the stock went up stupid high, and everybody wanted to get involved with it, right? Next thing you know, it spiked to $10, $15, $20, and it was like, up until then, it was like, okay, it was kind of understandable. And then the stock spiked to 30, 40, 50, 60, 70, you know, and it was like, what are they doing? And everybody was piling into that trade because it was the hot play at that time, right? And so now we're in this moment in the market, right? Where oil is becoming the hot play. Everybody's talking about oil, and so everybody's going to pile into oil and oil-related things, right? Because that's the hot play, just as everybody was piling into AMC stock. And, you know, then the folks that were left were trying to hope like things would get better. And you got to understand, you can pile into something if it's actually got a great long-term business model behind it. So if it's a company, let's say, for instance, that has a great long-term business model, okay, you got something there, right? You know, something like an AMC, I don't know about that, okay? Something like oil, no, I don't know about that. Those don't have things going for them that are greatly bullish over the next 5-10 years. That's not the way it works, right? But people like to pile in these things because it's attractive and because that's where the money's at right now, right? And so that's what's going to happen and continue to happen with oil, right? Now, here's the thing that's going to happen with oil. These oil and gas rigs are going to go boop, 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 boop. You know why? Because there's so much dang money to be made. If you're drilling oil right now, it's ridiculous. And you know how much pressure is about to be on the administration in office because gas prices are going insane? It's about to be epic. And I'm not just talking about from the Republican side. The pressure that's going to be put on this administration from the even Democratic side is going to be, you know, insane because gas prices are going up so much. And so they're going to do everything possible. And plus, capitalism takes care of itself. Everybody that could possibly frack for oil is going to be looking to do so right now. And these wells are going to go over the coming months and spike to levels that we probably haven't seen in a while. And then they're going to spike way too far to the upside, right? And gas is going to peak, oil is going to peak. And the next thing you know, we're going to have way oversupply, and next thing you know, prices are going to go, and then next thing you know, all of a sudden, rigs will go, That's the way this works every single time. It's capitalism. And right now, you can make so much money. If you're drilling for oil, it's disgusting right now. When you know, even in the United States of America, I don't even want to know how much the Middle East is when they can, you know, basically produce a barrel of oil for less than $10. The amount of money they're making right now is like, you can't even wrap your head around it. But even in the United States, you know, you're profitable at pretty much anything over like $65. And anything over $90, you're making disgusting money. And right now with oil at 120 and going up, there's so much money to be made right now for drilling. It's ridiculous. And so that's what ends up happening. Capitalism takes care of itself. Pressure gets put on, and next thing you know, all of a sudden these things revert, right? And so you got to be very, very careful trying to get into those sorts of plays because, things change very, very rapidly in this sort of market, right? All right, so that covers oil, okay? Next thing is, don't be dumb and don't not take advantage of these insane opportunities in the stock market right now. Now, there's insane opportunities even outside. If you don't want to play small cap stocks in this sort of market, fair play. Fair play. I can understand, even though there's so many deals out there, I can understand somebody not wanting to play those because they're like, oh, it's a smaller company. But the fact is there's so many large caps out there that have gotten so dang cheap, it's disgusting. And to not take advantage of some of these deals is just like, people are going to be kicking themselves in a few years. That's all I'm going to say. They're going to kick themselves and they'll be like, remember when I could get ... stock at this price? And I'm looking at Amazon, I'm looking at Meta, I'm looking at some of these companies right now that are at these sort of valuation metrics that they've never seen in their history. And there's going to be a lot of investors that pass on these stocks, right? They're going to pass on these opportunities and they're going to choose to hold cash or do something else instead of buying a lot of these stocks in these massive dips. And they're going to look back in 3 years and 5 years from now and be like, what was I doing? I had these sorts of opportunities in 2022, I had all these opportunities and I decided to sit on my hands. And you can't be dumb like that in this sort of market. PayPal, $92, $93, $94, $95. It's disgusting. And in a few years from now, PayPal will again be $200, $300+ a share. And people will be looking back and talking about, well, remember when we could get PayPal for such and such amount? It's the same thing that played out in March of 2020, right? When all those stocks dropped huge and people looked at all these stocks and were like, remember we could get ... stock? And in the December 2018 crash, people did the same exact thing. Remember we could get this stock at this price? And it happens every single time you have a major correction in the market, a major crash in the market. You get these insane deals on a huge amount of stocks, right? And people end up passing up on those deals or end up talking about them a few years from now and like, remember when I could have got such and such stock? And that's the thing that always hurts the most in the stock market. People think it's going down on positions that hurts the most. That doesn't hurt the most. What hurts the most is when you think back to time periods when you could get stocks for insanely cheap valuations and you chose not to buy the dip and you chose not to invest more money aggressively in that sort of market, right? And you got to understand, when you're in a fear market, that's when you have to be investing aggressively. You actually don't want to invest aggressively when market's at all-time highs, when stocks are all at 52-week highs and at all-time highs. That's when you want to take a step back and be very selective. But the time to be aggressive is when you get these drawdowns of 20+% in the market, when you're seeing countless stocks down 30, 40, 50, 60, 70, 80%, when you're seeing countless stocks at 52-week lows, multi-year lows. That's when you step up and that's when you're a buyer. And I know it's a scary time to buy stocks. But guess what? Every time's a scary time period to buy stocks. And you can say, well, what if, the nukes start going off? Well, dude, if the nukes start going off, you're not going to care about your stocks anyways because you're going to be dead, okay? So it's either you're going to be dead and it won't matter, or you're going to make filthy, stupid money over the coming years, okay? And it's one of those two scenarios. So don't be one of those that just looks back and is like, man, remember when I get all those stocks for all those deals? NVIDIA is a good example of a stock. On a split adjusted basis, like I taught a friend, stock market investing back in 2014. And, one of the stocks he brought me was NVIDIA. He understood the company on a pretty high level right off the bat. And, I don't know if he invested in the stock or not. I lost track of him. But, if he made the decision not to buy that stock at $4 on a split adjusted basis, it was a horrible financial decision to not buy that stock, right? I hope he bought that stock, and I hope everybody that understood NVIDIA on a high level bought that stock, regardless of whatever the fears were. And we had fears in 2015 about global recessions, and whatever the fears were in 2016 and 17, and all that stuff, right? I hope those folks that understood this company on a high level bought the stock and held the stock because they made stupid money on the stock. And despite all the drama that happened, the once in 100-year Rona, this situation we have right now, and inflation and trade wars and tariffs and, North Korea and all that situation that happened over those years, right? And all it added up into at the end of the day was NVIDIA making stupid money. And if you bought the stock, you made stupid money. And despite all that, right? And so that's where you have to, make these decisions. There are people that made the decision not to buy Tesla stock for under $40 a share in 2019 and made the decision to not buy the stock when it was under $100 during Rona, right? There are people that made those decisions. And that's just a bad decision, just a very, very bad decision. And what do people do? They talk about, oh man, remember when Tesla was under $40 a share back in 2019? And look at, Tesla today, even in this crash, is, $700, $800 has been holding up very well, right? And if you think about a company that's benefiting huge from oil spiking crazy and gas prices going insane, guess what? It's Tesla. And, that's what ends up happening. People pass on stocks that are at crazy prices, and they decide, you know what? I'm just not going to invest. And then they just look back a few years later, and they're like, why didn't I invest? And then this is exactly what's going to play out right now. The market we're in 2022, people are going to look at these stocks at these crazy low prices, and they're going to say, I'm not going to invest because of this reason and that reason. And they might launch the nukes off. So I'm not going to invest. And inflation's high. That's the thing. They'll make up whatever excuse. In these sorts of markets, you'll talk yourself into a corner, and you'll talk yourself into not buying the stocks. And then you'll look back in many years in the future, and you'll be like, oh, I should have bought the stocks. And it's the same thing that happens every single time, right? I speak about these stocks a lot. I'm just going to say it. Do some research into this industry. Do some research into plant-based stocks. Just do a little bit, okay? I'm telling you, this industry is going to boom like you never seen an industry boom before. And there's going to be a lot of people that aren't taking this serious and are going to regret it massively. And these prices we're seeing for these stocks in 2022, we will not see these prices in the future. And these stocks will go on some of the biggest runs we've ever seen from food-related companies. And it's not going to be all of them, but there will be some winners in this space. And there'll be more companies that will come public, and there'll be ETFs that will be built in this space. And it's one of the hugest changes I've seen. It's the biggest change I've seen since EVs, but this is even bigger. So this is like a multi-decade play, and there's going to be people that just pass on this opportunity, look into these sorts of companies, and there'll be some that take advantage. I think it's worth at least doing a little bit of research. That's all I'll say about that, okay? Now, right now it's not a market to be picky around pricing. You want to be picky in pricing when you're in a bull market and stocks are at 52-week highs across the board. In this sort of market where stocks are getting devastated, where you got max fear in the market and everybody's talking about WW3 and inflation's going to infinity and gas prices are going to infinity, when you're in that sort of fear market, you don't be picky around pricing in that sort of market. And it's very easy for folks to get pricey and be like, Amazon at $2,700? No, I think I want Amazon at $1,900. When Amazon hits $1,900, that's when I'll start buying it. And when you're in a fear-driven market, people try to get so picky around pricing when that's the exact opposite market. You don't get picky around pricing. Get picky around pricing. The next time every single stock's at 52-week highs and the market's flying high and it's FOMO, get extremely picky around pricing or don't buy. But in a market where everything's getting devastated and you got Amazon trading cheaper than it was in June of 2020, you don't get picky around pricing in that sort of market, okay? You don't get picky. You get picky in every other market, but that's what ends up happening. People start getting real picky in these sorts of markets. And they're like, you know what? I don't know. I don't know if I want Nordstrom at 23. I think I want Nordstrom at 17. Honest at 5? I don't know. I think I want Honest at 3. They just go through it, and that's what ends up happening. PayPal at 93? I don't know. I think I want PayPal at 73. And they start getting so picky, and it's because stocks are just going down and down and down. And meanwhile, you'll be waiting for that price, and then it's probably not going to hit. And you're probably not going to get in, and then that stock's probably going to double and triple and quadruple and 5x over the next 5 years, and you're going to be wondering, what the heck happened, and why were you so picky around pricing, right? And you'll justify it any way you can possibly justify it, and that's what will end up happening. And it happens every single time in these sorts of markets, and it's unfortunate. It's very, very unfortunate, but it will happen, and that's the market we're in 2022, okay? Next thing up here. Don't even think about shorting stocks, okay? People, they try to talk themselves into shorting stocks in a sort of market because that's where the money's being made. And I can tell you, especially in a lot of these smaller cap stocks, when this market flips, you're going to see runs like we haven't seen runs before. Because shorts are going to be so far caught off side, and shorts are already getting scared in some of these stocks. And that's like even though I look at TTCF, and TTCF continues to show strength over the past month. This stock's up in the past month, okay? This stock bottomed about 6-7 weeks ago, and it's up, despite almost every other stock seeming in the market and all the big caps and everything falling off the cliff over the past six weeks or so. And that's because folks are looking at it, and the shorts are like, market keeps going down. Now the risk starts to become, if you're on the short side, you could get some short squeezes that are just going to be of epic proportion. So yeah, shorting, if you're in a FOMO market, I understand shorting. It can make sense, right? It can still be dangerous because you never know how far the FOMO can last. But when you're in this sort of market where everything's been thrown at this market, like what else are you going to throw at it? The heck, they're throwing WW3 nuclear war at this market right now. What do you have left? What do you have left to throw at the market? You know what I mean? Like you, at some point you get to this sort of market where everything's been thrown at it, and you can't. It doesn't matter what you throw at it. It ends up stopping to matter to the market. And the question is, are we like within a few weeks of that happening or a few months of that happening? That's the big question, and that's the big debate, right? The last thing I want to leave you off with is don't be the in and out guy in this market, okay? Don't be the guy that has no plan, and you're in the market and then you're out of the market and you're back in the market and you're back out of the market and you're in the market and you're back out of the market. Don't become that type of person, okay? Because I'm telling you, it's no fun to be the in and out guy, okay? Always in the stock market, especially in this sort of market, you gotta stay disciplined. You gotta have a plan, okay? And if your plan is, I'm gonna average down in positions as the market goes down, whether this is we fall 30% in the indexes or 25% or 40% or 50%, whatever the fall is, if that's your plan, you're gonna average down. Perfect. Execute your plan. And as the stocks go down, you execute, you buy more shares, you increase your ownership position. Great, okay? And you hold those babies for the coming years as you come out of it, okay? But don't be the guy that's like, you're in one day and you're out the next day. I went into that trap in 2015 and it ended me in a bad place, in a very bad place. And so don't be that person. As somebody that's gone through it and became the in and out guy in 2015, don't become that guy. Because I'm telling you, it is the worst thing you could ever do to yourself. It's no fun psychologically, and you're just going to end up losing way more money than you could have made if you just stayed to a disciplined plan and you just said, you know what, I'm going to buy this stock, and if this stock hits this price and this, I'm buying, and throw it in the filing cabinet. And if it goes lower, you buy some more and you increase your ownership and call it a day. And if those companies have great futures over the next 5-10 years, they're going to have their great futures. If the nukes go off, it doesn't matter anyways. Okay? So, hope you guys enjoyed this. As always, just a little friendly wisdom from somebody that's been doing this for a long, long time. Make sure you check out some free stocks in the comment section. That will be a pinned comment down there. Also, if you're looking to join us, Hungry Bowl email daily newsletter. That's pretty awesome. Keep you up to date with the stocks, crypto news, biggest stuff going on in the market. I got a team that writes that each day, and it's absolutely free. So, I hope you enjoy that. Much love as always, and have a great day.